Less than P class equals data end equals 603. Data start equals 72 greater than. Hey everyone, let's talk about something that's been making headlines lately. The latest update on Canada's inflation rate. In April, inflation in Canada slowed significantly, coming in at just 1.7% year over year. That's down from 2.3% in March. And this sharp drop has a lot to do with the federal government's decision to cut the consumer carbon tax on energy products. According to Statistics Canada, this move played a major role in pulling overall inflation lower. But before we start celebrating, there's more to the story. Less than P class equals data end equals 1203 data start equals 605 greater than now, while the headline figure is down. And that sounds like great news. The underlying data is a bit more complicated. When you strip out the effect of the carbon tax removal, things look different. The Bank of Canada's preferred inflation measures, called CPI trim and CPI median, actually rose to 3.1% and 3.2% respectively in April. These figures are crucial because they exclude volatile items like food and energy and give us a clearer view of long-term inflation pressures. And these are the numbers that the Bank of Canada really pays attention to when making decisions on interest rates. Less than P class equals data end equals 1659. Data start equals 1205 greater than. So what's pushing those core inflation numbers up? Several things. Prices for vehicles and groceries were up, likely due to early impacts of tariffs. On top of that, we saw price hikes in services like restaurant meals, rents, and travel. For example, restaurant prices went up 3.6%, and travel tours surged 6.7% year over year. That's pretty significant, especially since these aren't one-time spikes. We're seeing steady increases over recent months. Less than P class equals data end equals 1871. Data start equals 1661 greater than. Shelter costs are a mixed bag right now. Mortgage interest is still high but slowly declining. However, rent prices rebounded in April, partially canceling out some of the downward momentum we had seen earlier. Less than class equals data end equals 2226. Data start equals 1873 greater than. What's interesting is that although we're seeing inflation in some areas, it's not happening across the board. About 48% of the Consumer Price Index basket showed inflation over 3%, down slightly from the previous month. That tells us inflation is becoming a bit more concentrated, which could be both good and bad news depending on how you look at it. Less than P class equals data end equals 2578. Data start equals 2228 greater than. So where does this leave the Bank of Canada? Their current interest rate sits at 2.75%, and many had expected a rate cut this summer, possibly down to 2.25%. But with core inflation showing unexpected strength, they might hold off. It may now take more signs of economic weakness, like slowing growth, to push the bank towards cutting rates again. Less than P class equals data end equals 3045. Data start equals 2580 greater than. In short, yes, inflation has dropped on the surface, but when you dig a little deeper, there's still some heat underneath. The carbon tax cut gave a temporary breather, but core pressures are still alive and well. It's a reminder that while policies can shift short-term numbers, the bigger economic picture remains complex and dynamic. Let's keep an eye on how this unfolds, especially as we head into summer with potential interest rate decisions on the horizon. Stay subscribed for more videos.